I think the best of the fiscal is over, and incrementally with elections around, GST cuts, people are saying that incrementally what more can be done on fiscal consolidation. So we have done a huge, I would say, fiscal consolidation over the last few years, but incrementally from here on, there's nothing new for bond markets to significantly rally.
Do you see a rate cut in the upcoming policy in India, and where do you think are interest rates headed in the US? Hello investors, welcome to Moneynomics by Axis Mutual Fund. I am Shalini Gautam and I have with me our head of fixed income, Devang Shah. Today Devang will talk about his views on how the bond markets have been, his views on interest rates in India and the US, and how should investors be looking at fixed income funds. So Devang, welcome to this session. And what do you think, how have been the bond markets in October? Also, could you share your views on the interest rates that you see, how they would be in the upcoming policy?
Right. Sushant, thank you. So first of all, I think fixed income markets were very boring for the month of October. Okay, we didn't see significant movement on either side. And like we had this entire one-side sell-off after the June policy till August. September, we saw a significant rally and we covered that in the last month video. But October, I think markets remained sideways and there were no factors which are leading to any significant rally or vice versa sell-off. While there are headwinds and tailwinds for bond at this point of time. And that is where I think probably markets are trading in a very, very narrow range. If you ask me what are the headwinds are we are at the fag end of the rate cycle. Okay, like whatever said and done, there might be opportunity for one rate cut or probably at max 2 rate cuts. But markets have started pricing in that rate cuts. And there is no incremental or monetary policy space which is there available, is very, very limited. Secondly, I think the best of the fiscal is over, and incrementally with elections around, GST cuts, people are saying that incrementally what more can be done on fiscal consolidation. So we have done a huge, I would say, fiscal consolidation over the last few years, but incrementally from here on, there's nothing new for bond markets to significantly rally. Similarly, I think if there are some bit of headwinds, there are tailwinds also, and we have spoken about this. That liquidity is now started to, like we had the last 6-9 months of best of the liquidity cycle. Incrementally, liquidity with every post this November CR cut is done, liquidity will start getting tighter. So then why that opens up space for open market operations. And the one important thing can be that we can get added in the Bloomberg indices. So because of these good mix of headwind and tailwinds, I think markets has actually remained or traded in a very, very narrow range. And I think from here on, I think policy, as you rightly pointed out, policy would set the tone for where markets will head towards.
Do you see a rate cut in the upcoming policy in India, and where do you think are interest rates headed in the US?
So good question. I think so. If you look at the Fed did a second rate cut, and probably now they've, after the September policy, back to back 2 rate cuts. They've also, if I look at the Fed policy communication from the governor, it is a bit hawkish, and US treasuries have actually sold off by 15 basis after the policy. There are 2 reasons. One is the hawkish communication from the Fed governor. Also the data points where people thought that US shutdown has started and now post the tariff US slowdown will start somewhere or another. We are not seeing any weakness in the data. Look at the ISM output and somewhere look at the overall inflation data, look at the crude data, everything is stacking up. So our assessment is that probably there is a possibility that Fed might take a pause in December. And where are rates headed onto in the US markets? We've always been telling that couple of rate cuts this year, couple of rate cuts next year. The couple of rate cuts are done for this year. Probably we see 2 rate cuts next year. Overall, it is very difficult for US treasuries to move significantly lower than 375 as per us, because neither there is a big growth crackdown, which will probably lead to aggressive rate cuts. Vice versa, I think the entire debt concerns which market had incrementally because of tariff revenue, because of interest rate cuts, I think those are subsided a bit. Those concerns are subsided a bit. Coming back to local markets, I think a good question about whether we'll see a rate cut in December. I think there's a high probability of RBI to cut rates in December. The reason being this month's inflation print, which will get printed on October print, which will get released on November 12th, you will see inflation close to 0 in India. Or this is a time where obviously RBI has to look at forward-looking inflation, forward-looking growth. But till the time the uncertainty on tariff continues, there is some space for monetary policy accommodation. This might be the good time for RBI to cut. But again, to summarize for our investors, rate cuts are limited, and at max they can do 1 or 2 rate cuts, and 1 rate cut is already in prices.
Devang, you said markets were boring in October. So where have you been finding opportunities?
So, Shani Singh, I think we have been now talking for a long point of time that we find out themes, and that is where the import, because the return for investors will all be dependent on what the themes in fixed income will work. Like 2024, I've been telling across to investors was a year of duration. 2025 till now was the year of liquidity, where the curve was steep. I think now the theme will be going across with the accrual. And we'll probably see that once the liquidity starts getting draining out from the system, I'm not saying it's going to happen immediately, but in the next 6 months or so, probably you start seeing the liquidity drain out from the system. And that is where the curve will again probably get flatter, and the theme which will come across is barbell strategy. A barbell strategy will make a lot of sense. What is barbell? In simple terms, you buy a bit of long assets which are already sold off, and buy accrual or short assets to ensure that you have a good mix of portfolio carry as well as duration to ensure that at all point of time you get good returns or good outcomes. Now, if I summarize our assessment at this point of time is that in the next 12 months, large part of the rate cycle getting over, accrual will be the theme which will actually make a lot of sense for investors.
So then, what would your advice to investors be?
See, we have time and again highlighted to our investors in now last multiple videos which you have shot and outlooks within videos which you have released, is that incrementally going ahead, rate cycle being over, you should find pockets in the accrual side. The short to medium term funds look attractive to us. Corporate bond comes out to be a good strategy. For medium term debt allocators, we have been now talking about since the last 6 odd months that income plus arbitrage comes out to be a clear strategy for investors who are looking at medium-term debt allocations. I think gilt, a large part of the story is over. So tactical opportunities of 10-50 basis, if one investor wants to play, they can look at long duration funds. Otherwise, I will stick out to the short end of the curve, the accrual theme, as well as income plus arbitrage FOF fund as a good opportunity for investors.
Okay. Thank you so much, Devang, for sharing your insights. And thank you to our investors for joining in. Stay tuned to Moneynomics. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.